Hello, best entry and exit strategy for swing trading. We are going to use think of swing platform maximum daily chart, and when it comes to entry and exit swing trading, PWR for instance, for the strategy we are using, I noticed that our best entry point is at the valley line because that is where you pay the least amount of price to buy the stock, and the best exit point is after it reach a new high. And it's because those stocks we are trading, they are upward stocks, growth stocks, they reach new high often. And using maximum daily chart, those high point mark on the chart, the high point you are going to usually just see one. It is the all-time highest price in the history of this stock since it went public, or at least that the brokerage company has in file to pull out. So, and for those growth stocks, you expect the one on your watch list to be the one that continue to reach that new high periodically. So you want to be selling after that new high is reached. And sometimes it might reach that new high and continue reaching higher highs for a certain period of time before it is done climbing the mountain and will decide to come down to the valley again. So in those instances, when you have that pattern, repeating pattern on the chart, you can decide to stay in the trade after you see that first new high, to stay in the trade for at least a half the previous time that it climbed the mountain, so that you can accumulate more profits. And buying it at the valley line, which will be your entry point, allows you to pay a relatively low price for it when the stock start going up from there. And then you can just leave it in your portfolio until it becomes, it reach that high point where you want to sell it, and you sell it. That way you will accumulate a good amount of profit, because to buy that stock again, it could take a while before it comes back down to the valley and start a new cycle. So therefore, you want to stay in the trade as long as you are comfortable staying in the trade, accumulate a good amount of profit, and then you can sell it and lock in that profit and wait again to buy at the valley. And buying the same stocks over and over using that strategy allow you to invest in that stock, but locking in the profit, the growth away from the valley line, locking it in as you go along. So that is the best strategy that I'm trying to master, to improve, because you are going to determine the support line, that is the valley line that stock is going to rest on and go up, and you are going to determine how long you can stay in the trade after you see a new high, so that you do not overstay. So those are two skills that we are going to keep improving, and it only takes with practice, I will think. Therefore, keep swing trading, and by swing trading the same stocks, you'll get yourself familiarized with the stocks chart, the stocks on your watch list, their chart, and see how they are behaving, so that if you buy at a higher price than you want it to, you'll notice that after the fact, you can learn from it, and next time you are going to buy that stock again, you can pull from that knowledge, that experience, to do better and just get better over time. I think it is a journey. It's not about knowing all it is there to know before you make the first step, but you will improve your skills, your tips, with practice. When we take PWR, we will notice that we have our valley line that we like to buy at, and we purchased it at the beginning of 2025 around this valley line. And by looking at it, it is the supporting line supporting the upside wall of the mountain, and it looked like a valley line because it's pulling back to it. But in some way, it can be viewed as a wall supporting the upside wall of the mountain as it was climbing up. We purchased it there, and then it continued to pull back. We kept it in our portfolio, negative for that time being. When it reached this valley line again, we assumed this could be the valley line. We bought it again. So arrows facing upward that we put there show where we purchased, and it went up and pulled back again. We became negative in this second purchase, and after the stock reached this support line again, we became positive in the first purchase, and shortly after it reached a new high exceeding this price, and we sold it because we are not entirely sure. I think my analysis back then will be, if it pull back, I could easily be negative in this. It did pull back, but not as low as here. So we got out, but then that is the things. When you buy it at the valley and you got out at the first new high, you don't know if it's going to continue making higher highs or if it's going to pull back from there. And as we can see here, when it touched it started going up from this, it did it for more than a year. So there is a chance that if this is the valley line, it could well continue this for a year. And it touched base with it in March. So therefore, we could anticipate that to be, in this, continue climbing the mountain for about a year, well into spring 2026 before it pull back. And that means we are not going to find an opportunity to buy these stocks if we want to buy it at the valley line until it comes back down to it again. So that is the best, entry point in a term that will pay a low price for it, and the best exit point is after a new high, so that we can accumulate a good amount of profits in it. And trading those upward stocks, growth stocks, there is no point of trading them in a short period of time, necessarily if you don't want to, because we are using long uptrend lines, and therefore we are taking the valley line, which is a long line that it'll come back to rest on and go back from there, and we are taking a new high as the exit point, taking the valley and the peak of the mountain to be where we buy at the valley, and the peak of the mountain where we sell it, again around those areas. That is the best entry and exit strategy for us, based on our long upturn and swing trading strategy that we are using to swing trade growth stock, and more precisely large cap growth stock. So the next one we are going to analyze, and later we can see how much money we make in PWR for those trades. ROL, we have not purchased it yet. We have two valley lines that we like to buy at, but right now, it continued to go up, and is using this support line to rest on and continue going up. It's now ready yet to come back down, and this support line is a long one as well, because it crossed 2 years. We have the date on the x-axis from the past to the present, and we have the price on the y-axis from 0 up. So this could be a line to buy at as well. But the problem with that is, if it's done climbing the mountain, at some point it will pull back below it. And if you are in it, you purchase it and you thought it's going to continue going up, then you'll get stranded in it for the time being that is below it until it comes back up. For that reason, we are avoiding buying at the support line that is supporting the upside wall of the mountain, and buy at the valley line. And one way you might buy around that supporting line is if you didn't catch it at the valley line, it start going up, and you know that it has now reached maybe the first new high yet, and when it reaches, it's going to take a while, continue reaching more and more higher highs. Then you can buy around the upside wall of the mountain support line, to get in the trade. But again, it depends on the chart, the stocks as well. You can make those exceptions. It's not that you necessarily have to buy at the valley line, but that is the best entry point for your money. But for stock that is going to be rising for a while, if you do not see it around the valley line, it left there before you catch it, depending on how far it has gone, you can still get in the race as well from there as well. As for this one, being the first time we are going to swing through it, we just keep observing it because we just prefer to buy at the valley line, and it has not come back down there yet. But again, it is a personal choice. But it touched base with this support line right at the beginning of 2025, and it touched base with it again this month. So whether it's going to continue going higher or when it's going to come back down, we are not entirely sure. We are just going to continue observing it. Now we can go back to our record spreadsheet and look for PWR. So PWR, for the first one, we pay $305 a share for it. The second one, we pay $250 for it. And we purchase it a month apart, February and March. And then we sold both in June, 4 months later, for $352 a share, and we paid a penny for the brokerage fee. And we made on the first one that we pay a higher price at that supporting line, supporting the upside wall of the mountain, we make $47 profit per share, or $947 for the 20 share that we purchase, and that is 15% return. On the second purchase, we make $101 profit per share, or $2,033 profit for those 20 shares that we purchased, or 40% return. And that one was 3 months time frame to make that 40% return on it. And that is the best entry and exit. Even though we could have stayed longer in the trade for even a better exit, for buying it around this valley line, we made a very good profit there, over $100 profit per share, when this one gave us $45 profits per share. So both examples are there for you to pick which one is your best entry and where your best exit point will be. The goal is to see how long you can stay in the trade without overstaying and without getting out too early. Thank you so much for your time. And for that particular one, if we total those, is 2,980 profits on it. Thank you so much for your time. We thank you very much for watching our videos. Thank you for your comments, and thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. on our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money, but start small. And the first goal, the main goal, is to make profit on each one of your swing trade. And you can see that the first purchase of PWR, we purchased it at a higher price and we just left it there. It took a month before we bought it again, but even that, the first purchase, we stayed negative in it for a while before it became positive. So we didn't sell it at a loss, we just left it there. Therefore, pick stocks you can invest in long term to swing trade, so that if you end up buying it at a wrong price, you just let it be in your portfolio, learn from it, and let it be until it becomes positive for you to sell it. And that is why we prefer to swing trade growth stock. And for this one, buying it in February, we were negative in it until May, and that is 3 months that we were negative in it. But it surpassed that area and continued and gave us $45 profit per share there, and it's still going up. So for that reason, we prefer not to put stop loss when we trade. We don't set stop loss, we just let it be, and we just keep an eye on those and learn from it. And putting arrow on where we are buying allow us to put some landmark along the way on the chart, so that we can look back and see if we made a good purchase and so forth, and where we sold it and so forth, to learn from it and keep improving. For more of our swing trading strategy, will you please check the playlist in the description of this video. And this video is brought to you by our online store, Liberman.com. We list a tote bag. If you are looking for a tote bag to purchase, will you please check it out, please? Thank you for your time.